So do you still struggle with understanding the difference between an operating expense and a financing expense? Well, in this video, I'm going to clarify those things up for you. Coming up. Hey there, it's Billy with Keep On Cashflow, helping you to grow your money and your mindset so that you can get closer to the lifestyle that you really want to lead faster. On this channel, we'll be sharing weekly tips and strategy videos just like this. So if it's your first time here, you're going to want to consider subscribing. And you're also going to want to make sure that you check out the links and the comments in this video because there's going to be lots of learnings there for you. But as for today, I want to get back to the topic of helping you to understand the difference between an operating expense and a financing expense. First and foremost, it's really about understanding your profit and loss statement or your income statement because it depends on where they appear in this statement. But just to keep it very, very simple for you, just like the name says, there are operating expenses, which are really related more to the day-to-day maintaining and keeping your properties going, making sure that they have everything that they need from a day-to-day standpoint. Think about all the things that you need in the morning when you're getting ready to leave for work or for school. There are certain things that you need to be able to get out the door. And then there's the other side, which is really about the way that you are using debt, if needed, to go out and operate the property. So those are really more about financing expenses. And a lot of times those are things like terms like debt service or mortgage is where you'll see those things. But let's go back to the operating expenses. And I'll give you a couple of examples so that will help keep things very, very clear for you. First and foremost, when you're looking at operating a property, one of the first main expenses that you have is looking at things like insurance. So you have an insurance expense that you'll need to pay to make sure that your property is protected and if against any type of liabilities. You also have other types of expenses such as your maintenance and repairs. Those maintenance and repairs are things that, well, if a door breaks or you have an issue with one of the toilets or a wall or anything like that, that you need to go and have those repaired as well. Another type of line item that you can think of as well are things like taxes. Well, taxes are absolutely a part of being a landlord or being part of it as a real estate investor. Those are the types of expenses that you need to keep in mind all the time. You also may have things like travel and expense. Those things that you need to either bring on new clients or make sure that the clients that you have are maintaining, or maybe they're increasing their spend with you. But that's another type of line item, such as travel and expense. Another type is professional and legal services. For instance, anytime that you have your lawyer or attorney to represent you, whether it's a new transaction or it's something like an eviction, those are another line item of expenses that are needed for day-to-day operations. The same thing for anyone that you would hire to do specific types of jobs on your property are also included. And let me just leave you with just one last one. For instance, if you also have employees that are part of your payroll, those expenses are also part of the operating or the operations or the operating expenses from a day-to-day perspective. So hopefully that helps you get an idea of some of the things that are included in the operating expenses. And so now let's move over to the financing expenses. And I'm going to keep this very, very simple because it can get complicated. But just to make the financing expenses very simple, as a real estate investor, you're typically going to be working with one primary, and that is when you're using debt service or a mortgage. You're using that mortgage to go out and secure more property. And because you're actually using that, you're using your debt, it's actually handled in a different type of a way. And that's why you see the debt service or financing expenses below the net operating income. And so hopefully that helps you to simplify and understand the two different types of expenses, why they appear in the beginning, the operating expenses above net operating income, and then after, it's really more about how are you using debt to go out and leveraging debt to go out and secure more property. So just wanted to give you that example and talk to you about those because I hear the question all the time. Help me understand the difference between operating expenses and financing expenses, and hopefully that's done that for you today. So I always love to get your comments and questions. Help me to give you more content that you're looking for, need, and questions that you may want to share with others. So I always like to say that this is Billy Keels with Keep on Cashflow. That's my 2 cents for today. And as always, hasta la próxima.